of stocks, right? So what are stocks? Um, and what are stocks and what are stock markets? And there is another term called shares, right? Which you might have heard of a lot in India. But it's also used here, but in sometimes you use the term stocks, sometimes you use shares. So stocks is nothing but ownership in a company by investing your money. So, for example, an example I gave here, right? Nvidia, right? So we all know Nvidia. It makes chips and processors and all that, GPUs. Uh, if you want to own part of Nvidia company, right? I'm talking about Nvidia company. Then you can put money in Nvidia shares and own portion of Nvidia. So, for example, if you buy one share of Nvidia today, the price is about $140. Uh, that will give you a fractional ownership of the company. It's like 0.00000 something 1% of the company, right? So, if you buy 100 shares of Nvidia, that will give you a little higher percentage of the company. If you put in $1 million in Nvidia shares, then you will get even more ownership of the company, right? Uh, so stocks are nothing but ownership, right? What's a stock market? So stock market is the place where you can actually buy these stocks and sell these stocks. Okay. If you have seen any movies on Wall Street or anything like that, you might have seen all the stress that goes on the trading floor in New York, right? When the stock prices are going up or down, all the commotion that happens among the brokers who actually work in the stock exchange, right? So that is the stock market. Uh, when we buy and sell stocks, we don't actually go to the floor there and contact somebody to buy and sell. It used to happen a long time ago when there was no internet or buying and selling. You always had to contact somebody who would contact someone who would know somebody on the trading floor who would buy stocks for you, right? That's no longer the case. You can right now today you can trade stocks right from your laptop, your phone, in the matter of seconds. Okay, milliseconds, or even microseconds. Right. So that's basic. These are just the basics of stocks and stock market. Okay. Um, some of the key terms that you will hear in this presentation are what's. Okay, let me zoom in. And you all can see my screen, right? The
Yep.
presentation. Okay.
Yes.
Yes.
All right. So, what is a bull and what is a bear market? You might have heard of these terms. So, bull means when stock prices are going up. Bear means when stock prices are going down. Generally, like every day, some stocks go up, some stocks go down. But when you hear that, oh, this has been a bear market, that means majority of the stocks were going down. Or if you hear, hey, this month has been bullish, that means majority of the stocks in the stock market have been going up. So that's just the basics of bull and bear. Because like if you see bull, if you have seen those bull and bear statues in New York, right? So bull means they have these horns, so they actually use their horns to pick something up, or that means rising the stock prices. While bears use their claws to bring something down, so that's why it's a bear market, right? That's how you can basically remember these terms. Uh, Next term is dividends. So if you buy certain shares, then some companies usually reward you just because you are owning their shares. So let's say you buy 50 shares of a certain company. Then the company might say, "Hey, this quarter we will give 20 cents per dollar of shares that people own." So if you have invested $1,000, they will pay you whatever $20 or something, right? Um, so if you have $10 invested, then they will pay you whatever $2 or something. So this way the companies reward you for owning their shares. Not all companies offer dividends. So companies like Tesla, Nvidia, which are high growth companies, they usually don't offer dividends. Because once a company starts offering dividends, it's a bad sign if they stop offering dividends from a certain quarter, because that means that they cannot pay their investors. So that's why usually companies don't choose to pay dividends if they don't need, right? Um, Third one is capital gains. So capital gains means nothing but profit. So if you buy 100 shares of company A at certain price, let's say 100, you buy one share of Nvidia for $140 and sell that one share for $145, then your profit is $5. So $5 profit is nothing but capital gains. Brokerage. So as I said earlier, today you don't need to call somebody to buy or sell your stocks, or call somebody on the trading floor. You can do it right from your computer or your phone. And for that, you need to use trading platforms. So there are certain trading platforms like Robinhood, which is really good platform for beginners. Charles Schwab is another company that offers tools for trading. Fidelity, TradeStation. There are many different brokerages in the US that you can sign up for. Each brokerage has a different type of interface. So some people who are Robinhood fans, they don't trade using Fidelity, or some who have been trading using Fidelity, they don't trade using Charles Schwab. So it just depends on your personal choice. Also, each of these brokerages have different fees. So when you buy and sell stocks, these brokerages charge a certain fee to when you buy and sell. Companies like Robinhood don't charge anything. They say that it's free, but there are some hidden costs that I will explain in detail when in some other session. But yeah, nothing is free in this world. So you pay for something, right? S&P 500. So you might have heard this term as well. So there are 500 large companies in the United States. This is a so S&P 500 is nothing but these 500 large mega cap companies, such as Nvidia, Tesla, some financial companies. All of these constitute the S&P 500. Um, Nasdaq 100 is a collection of 100 large companies. The difference between S&P 500 and Nasdaq 100 is Nasdaq 100 is mainly focused on tech companies. So Nvidia, Tesla, Broadcom, or some other companies, right? While S&P 500 is a collection of these tech companies, it's a collection of financial companies, retail, all these different sectors, right? Oil or any other sectors that you can think of. So that's why it's more broader. S&P 500, while Nasdaq 100 is more tech oriented. Any questions so far?
Nope.
No.
So next step, what I'm going to do is I'll just take you through Robinhood, and I'll show you an example of how you can buy and sell stocks using Robinhood. I'm not actually going to buy and sell something, but I'll show you just until the step of paying the money, right? Because I don't want to buy something right now. Okay, so I'm going to bring this over. Okay. So this is the Robinhood platform, and uh, here there is a search box where you can search for these companies. Let me see, make sure that you're seeing my screen here. Uh, are you seeing Robinhood screen? Does it say Robinhood.com?
Yep.
Yes.
Okay. So give me any name, right? Give me any company name that I can look up. Anybody? Any company that that you use or you're familiar with.
Tesla.
Food.
Tesla? Okay. Tesla. So you just type that name, right? Tesla. Usually the first thing that shows up is the company. So this on the left hand side is a symbol, right? So Tesla's symbol is TSLA. When you start getting used to these the stock trading, you will never say Tesla. You will always say TSLA. It's just when you once you get used to the trading, people stop using the actual names. They start using the symbols, right? So you type the name and then it will show up, and you click that, and now it will show you that Tesla, right? And see if you notice this keeps changing because it's still being traded after hours. Market hours are 9:30 a.m. to 4 p.m. every day, Monday to Friday. Saturday, Sunday it's closed, and also on holidays it's closed. So for example, this week on 25th it's closed. Uh, so so Tesla's current price is $433.79. Okay. So this middle portion shows how it was trading today, right? So let's say, all right, so how it was trading. So the market opens at 9:30, right? So you can always go through this chart and you can see 9:30 a.m. So right now I'm at 9:30 a.m. So at that time, Tesla's stock price was $431.19. If you had bought Tesla at that point, let's say you just bought one share of Tesla at 9:30, and if you had sold it at say 4 p.m., wow, it's almost the same. So you would have had no profit, no loss, right? Because it's the same price at 4 p.m. But if you had sold it, let's say at this point, at 10:10 a.m., your $431 would have been $418. So you already lost about $10, $12, right? 12, $13. But if you had sold your Tesla at 11:20, you would have made $4, right? $434.18. So it's just the same concept. You can buy at a certain price and you can sell at a certain price. If you had bought it at 10:10 a.m. at 418, and if you had sold it at its high during the day, which was 434, you would have made a good amount of money, right, during the day. Uh, it's the same concept. And the way you buy stock, it's very simple using Robinhood. If on the right hand side you see buy Tesla, right? Uh, Order type, limit. Okay, so when you say limit, let's say Tesla is trading at 433.76, but you don't want to pay, you have a certain price in your mind. You want to pay only $430 for Tesla, right? So you type 430 in this text box, and what happens is during the day, if Tesla goes down, and if it goes at or below $430, then whatever number of shares you specify. So in this text box, if I say just one, notice that estimated cost here, it says $430. Okay. So if you said one share of Tesla at $430 limit price, then what will happen is at when it hits 430, one share will be bought for you, right? Um, so that's just a limit order. If you just say buy order and just say shares, then whatever the current price of Tesla is, it will just go ahead and buy it at that best price, right? Uh, the risk with that is, maybe in 1 second, if Tesla just goes from 433 to 450, which generally doesn't happen, uh, then you might end up paying more for that. It really matters when you are buying. Let's say you want to buy 1,000 shares, right? That's how much, $433,000. I mean, it will even 1 cent will make a difference, right? Or 10 cents will make a difference. So it really makes a difference when you are buying a large amount of shares. Then even 10 cents make a big difference in the amount that you are paying. But if you but if you're just buying one or two shares or 10 shares, right, it doesn't really matter much. That's how, so I'll just go ahead and let's say one. and then it says review order. I click that, right? Then it says, okay, order summary. It asks you to verify this. You are placing a good for day limit order to buy one share of Tesla, and it will execute at that or better, and whatever the limit price set 5% above the traded price. Uh, so uh, it basically, I think it's saying that because it's after market, right? If it was during the market, then it would give you a price which is at that, it will just buy it at that price, right? So that's why you should never buy a market order after hours. If you want to buy, put a limit order, and then that way it will just buy it at that specified price. Okay, so when you say that and you say review, then the next step is just clicking that buy button. I'm going to make sure my mouse is not is above that, but you say buy, it just buys that share, and then you will own that share of Tesla, and it will show up on your Robinhood account, right? It will show up somewhere. So, right, like let's say I'll show you an example. These are the some of the stocks that I own, right? So it will just show up somewhere in here, right? Okay, so for example, I got Rivian 100 shares, so it will just show you 100 shares instead of Rivian, it will show Tesla 100 shares or one share or whatever number of shares you buy. Um, in Robinhood, you can also buy fractional shares. You can buy, you can also buy zero point 0.2 shares, or just based on how much money you want to put in. So for example, you don't want to put $430 for Tesla. You just have $100 or $50. You just want to put $50 in Tesla, right? Then what you can do is instead of buy in shares, you can select that drop down and go to dollars, and you can just say, okay, I just want $50 of Tesla. So Robinhood will automatically calculate, okay, for $50, you will get 0.11 share of Tesla, right? So if Tesla goes up in price, your $50 can become $60, $70, $100, right? I mean, but that price, that gain will be much smaller if Tesla moves. Even if Tesla moves $10 up, your gain is not going to be huge, right? Because you only own 0.11 shares of Tesla. So it's just simple math, right? You can also say, okay, I just want 10 shares of Tesla, right? It will buy you 0.023 shares of Tesla. So, right? Now, once you buy shares of a certain company, right? Let's say I have certain shares, GE Vernova, right? So I have 100 shares of, so this is how it will show up on your account, right? Your average cost, so average cost of these shares was 100 shares was 339.99. That's the price I bought it for. Uh, Today it's the GE Vernova is trading at 344.92. So I have total return is plus 493. But this is not realized return. So this is what I will get if I sell GE Vernova 100 shares right now, right? So this is called as unrealized gain. It's not a realized gain. It's just unrealized. But if I just say okay, sell order, and I say shares and I just say 100, right? That's 100 shares of GE Vernova. Then I'll get back 34,492, while my cost was 339,000, 33,999, right? So that difference is what $493 is what I will earn. So it's a simple buying and selling. You buy at a lower price, you sell at a higher price, right? That's just the basics of stock trading. Any questions so far?
So
Nachiket,
Nachiket, sorry.
yeah, please go
So
ahead. Please go ahead.
for the order type, like if I'm a beginner,
Mhm.
what would be the best order type that I should choose? And the second question was, where do you see the brokerage, like the cost?
Okay. So for order type, You can select. So when you say what type of, right? You mean market order or limit order, those
Yeah,
types?
as a beginner, like I don't know which one to choose. So, which is the safest one or which is the best one for a beginner?
So safest one is always limit order, because that way you can specify your price. Let's say, for example, let's take this stock. So today at 9:30 it was $342.59, but its lowest of the day was at 10:10, which was $337.33. Um, let's say, so it opened at 345, but you had a certain price in mind. You were like, okay, I don't want to pay more than 337 or $338, right? So what you would specify is 338, right, in the limit price. And let's say you want 100, right? You can select any number of shares here, but let's say one share, right, just for simplicity. So in that case, and you can say trading hours, market hours, or extended hours, or 24-hour market, right? Now, just a few weeks ago, the SEC started allowing a 24-hour market for stocks. But earlier you could only trade during the market hours or extended hours. So market hours 9:30 to 4, um, and you can specify when your order will expire. So let's say you say 1 p.m. tomorrow. So until 1 p.m. tomorrow, if GE Vernova never goes down to 338, then your order will just expire and nothing will happen, right? But if it does go at 338, then it will get bought at $338. So always use limit if you want to pay less and you think that the stock price will go down. Now, when I say think, I'm not saying speculating, but there are certain indicators which you can use always to study how stock movements happen, right? So, and your second question was, what was your second question again?
The brokerage cost, like the buying and selling cost.
Okay, so if I do this and if I just say review, Robinhood has zero costs, so it will not charge you anything for buying and selling stocks. So it will, if there was, if there had been a cost, then it would have shown it somewhere here, estimated cost, and it would have broken it down. Uh, but Robinhood doesn't charge you anything in commission. Um, I think most brokerages today don't charge you for just buying and selling stocks. Some might charge you a certain fee, but most that I know of don't charge these days. When I
So you,
started trading, it used to be like $5 per trade, right? That was a huge cost.
okay. But usually you would see that cost upfront when you hit the buy and sell
Hmm.
options, right? Okay.
Yes, you would always see it here. Right,
All right. Thanks.
no problem. Um, okay. Any other questions? I think there was somebody else who was asking some questions.
Nishit,
Yeah,
this is Sachin.
I said, yeah.
So I had two questions. One was, so is it like the your bank account is directly linked to need to be directly linked to platform like
Yeah.
Robinhood, where it would deduct or add the money based on what transaction we are doing?
Yes. So your bank account needs to be linked. When you open Robinhood account, you just open it
Right, right.
zero balance. So you don't need any balance. But in order to trade, you need to link your account and deposit money in Robinhood. So, if you go to your account, I think there is transfers, and here you can just add your uh, linked. It's showing me my bank accounts that are linked, and that way you can transfer money. It takes maybe a couple of days, I think, to verify. These days it might be quick. It might be instantly. Um,
Okay.
but when you
So you
transfer money from your bank to brokerage, it takes a few days. It takes 2 to 3 days for the money to appear in your brokerage account. It's not
okay.
instantly.
So it would go from the account on the Robinhood, not directly from the bank, right? We have to first transfer money from bank to Robinhood, and then that's where it would
Correct.
get transacted.
Exactly. Yes. And
Okay.
I see there are
Thanks.
several other options also. You can set up a direct deposit from, from your paycheck. You can
Right,
deposit
right.
a certain amount and wire transfer and all these other options.
Okay, okay, thanks. And my second question was how does the taxation work when you sell the stocks? Does it or
Yeah.
does it have to be done at the end of the
Yes.
year?
So you will definitely pay tax if it's an individual account. For example, whatever your tax bracket is, so let's say you buy. Let's just take this example, right? Uh, you buy and sell GE Vernova and you make $493, right? Then your tax will be calculated as your based on your tax bracket. Let's say I don't know, maybe 24% of your gain, right? So that's
Okay.
118. So in from out of 490, so this is just rough calculation, right? But out of 493, you will have to pay $118 in tax. And tax is always on the gain, it's not on the
Correct.
principal, right? So whatever money you make, you will pay tax on that. Now, if you keep your stock for 1 year, more than 1 year, so let's say for after 1 year you sell it, then you will pay less tax. It will be a long-term capital gain tax. So instead of I don't know exactly what is the rate today, but it's probably about 20%, 15 to 20% in tax. So it will be less tax. So I think 20 is what about $98. So you'll save some money
Mhm.
in taxes. Um,
Okay,
yeah,
thanks.
no problem. Uh, on the topic of taxes, um, you can trade stocks using a tax-free account. So IRAs, if you have an IRA account, so I think traditional IRA accounts, you can contribute about $7,500 per year. Uh, Tax in that whatever gains you make on your investments, it's all tax free until you are what 60
Traditional.
years of age or something. So once you are 60 and you withdraw money, that time you pay tax based on your tax bracket during that time, but you won't pay any tax until then.
So what does that mean actually? So when I opened this Robinhood account, it
Yeah,
told me about like IRA, traditional IRA versus something.
correct.
So
So when you open Robinhood account, it will ask you to invest in IRA or to open an IRA account. Um, So you can choose to either just open a regular brokerage account and a non-IRA account, or you can. So I have both. You can see here. I have an individual account. I have a traditional IRA account. So anything that I trade in the individual account is taxed every year. So I have to pay tax on if I realize any gains. Now, at this time, for example, I will not pay any tax on this $493 because I have not sold this stock.
correct.
So as long as I don't sell the stock, I don't have to pay any tax because these capital gains, unrealized gains are never taxed. But traditional IRA, whatever money I make, I don't pay tax on that. Uh, and there is a certain limit that government allows every year. So I think in 2024 you can contribute about $7,500. If you see traditional IRA limits, right? Annual contribution limit, that's for 2023. I think 2024 is more. Yeah, $7,000 for 2024 if you are under 50. If you are over 50, I think it's you can contribute more. Um, so that much money, anything you make, you gain any gains above that is all tax free until the age of 60, I think.
Uh, uh, so even if we withdraw before 60,
Oh no, you cannot withdraw. Yeah, that's true. So from IRA account, you cannot withdraw until you are, I think it's 59 and a half or 60. Yeah, I think it's
Yeah,
something.
Nachiket, I think, yeah, just to add that, yeah, so just to clarify that, you can withdraw, but there is a 10% penalty. And then
Exactly.
you pay tax on top of that as well. Because that
Correct.
IRA money is pre-tax money. So if you withdraw, you pay, let's say if you are 24% tax bracket, you pay 24% tax plus 10% penalty for early withdrawal.
Yeah.
So that's the rule for IRA contribution. And there is a income limits as well. So if you family income, let's say your is, I think is, I think filing married, I think what's that married and filing jointly.
Hmm.
And if your family income is more than 180,000 or 190, then you cannot contribute in IRA directly. Just one more thing, just in the Nachiket, the bracket may be different, but those
Yeah.
are the some restrictions. Right?
Correct. Yeah.
Yeah.
So
So,
this IRS page, I'll send a link to this, but this kind of explains these and what traditional IRAs are, Roth IRAs are. So yeah, there are ways that you can save. Not there is nothing called save, but there are ways you can defer taxes, right? Uh, so traditional IRAs help you defer the taxes. Roth IRAs you can do, but Roth IRAs, you contribute uh, from your bank account. It's not, and again there are certain limits. Like if you have certain income, then you cannot have a Roth IRA. So there are all these different things that you can check.
Yeah,
Okay.
Nachiket, you want to talk about this 1099 statement that we received from Robinhood at the end of the year?
Yes. So if you go to Tax Center in Robinhood, they send you this consolidated 1099 form. When you file your taxes, that's the form you need to use to enter the details in your tax return. So if you're filing your taxes yourself, the tax software or tax the online tax tool, it's pretty simple. Like they will ask you what are your long-term gains, short-term gains, based on your consolidated form. And this I think you receive every Feb or March, so you can file your taxes. Um, so yeah, it's usually like the more you trade, the fatter this PDF file becomes. So you might have 100-page PDF, but all you need to focus on is the first summary page, and that's what is needed for your tax returns. And it will show you, what your long-term gains are, what your short-term gains are. So that way, the tax tool can calculate how much to tax you, right? So you don't have to worry about that portion of figuring out what are your short-term and long-term gains.
And it would be always like Jan to December, or is it a different time,
Yes,
financial year?
it's Jan 1st to December 31st. Right. That's the time frame. Okay. So anything about stock buying and selling? Any questions on that? Looks pretty simple, right?
Yep.
Okay. Uh, let's see. Stocks. Okay. All right. Next is okay. Buying and selling is a very simple process, right? Just if you have money, you buy, you sell at a certain price. That's fine. But how do you know which companies to trade, right? And when? So these things really matter because if you are buying a stock at a much higher price, and you just get stuck with that, if the stock price never goes up, then you are just stuck with that stock until it goes up, right? Or if unfortunately if it doesn't go up, then you're stuck. So there are you know different fundamentals, right? So some of the key ones are, if you have studied financial accounting, this will be very handy for you. But if not, there are certain tools that show you these things, so you don't really need to do any financial accounting research for this. You can find all this information on the internet, and I'll show you where to find it. Uh, so for any given company, this is just like doing business, right? Yeah, you do not want to invest in a company which is going down or which does not have strong fundamentals. So you only want to invest in companies which have strong fundamentals. So one is income statement, right? You will always look for how is the company performing over the last few quarters or over the last few years. So you would want to look at the revenue. Is the revenue going up year over year, right? Is the net income positive? If is the operating income positive? Earnings per share. So whatever earnings the company has, so earnings per share uses a formula to calculate, okay, per share, what are the company earnings? And let's say Tesla is trading at whatever 400 something dollars, but Tesla's earnings per share might be just $100. So it's overvalued, right? So actual Tesla might be worth only $100 per share, but you are paying $400 because with a certain uh, assumption that Tesla is you know Tesla is the company of the future, right? So this shows you how much you are paying for the stock and how the company has been performing. Balance sheet is another thing. It shows the company's financial position at any given point. So assets, liabilities, equity, debt to equity ratio, current ratio, so all of those things. Uh, Cash flow is does the company have positive cash flow? So for example, Apple company, right? Apple has a lot of cash. Uh, so if but if you see its stock, it doesn't move much, except for certain periods, but it doesn't move much compared to other stocks. Because it's got a lot of cash. It's pretty stable company. So stable companies usually have a uh, uh, stable price movement, right? Uh, so yeah, so cash flow shows how much if the company has positive cash flow, how much cash the company has. All of those things you need to see to make a decision whether to buy a stock. And these are just maybe 10% of everything that you should be looking for in a company, right? Always do your research, and I'll show you using the trading view tool that how you can check for these things. So this is a tool called tradingview.com. You can go to this website. It's a free, you can create your free account. You can always buy a premium. I got a premium version, so just because I use all these indicators that you see here, but you can always use free account if you just want to do some research, basic research on companies. So using this tool, you can just type any company name. So let's say Apple, right? I want to look at Apple, and I'll just zoom out on the time frame, maybe one day or something. Okay, so this is a daily chart of Apple, right? Now on the right hand side, you can see certain basic details of Apple. So what's the company, right? It's in electronic technology, telecommunications equipment. This is the current price of Apple, right? $255.27 per share. And then key stats. Okay. So let's go down to financials. So these are the financials, right? Uh, if I select quarterly financials, in the drop down, you can select income statement, balance sheet, cash flow. Okay, so these are the things that you can, and if you hover over these things, it will show you. This is the most recent quarter four of 2024, when they reported their earnings. Their revenue was $94.9 billion. Net income was $14.74 billion. Net margin 15.52%. If you go to the previous quarter, you can always compare using this, right? So let's see how it compares with Q4 of 2023. Then revenue was 89.5 billion last year. This year is 94. So revenue has gone up, which is a good thing, right? Year over year. So net income 22. Sorry, it's not year over. It's quarter, right? Comparing the last quarter with this quarter. Sorry, the last year's quarter four with this quarter. So you can do all these comparisons and see in general if the company has been doing good, right? If you go to annual, it will show you annually, right? So annually revenue this year was 391 billion, last year 383, 394. So it's been pretty constant for the last 2 years. 365, 274. So it definitely has gone up from 2020. Uh, Now 2020 is a exception because it's a COVID year, but we need to look at if you go to more financials, it will show you more in detail about these things. So uh, I think you can scroll or you can see some more years also somewhere here. Right. Yeah, you can go all the way back to 2017 in this case. Yeah. So you can check all those details and see how just in general how the company has been doing. You don't want to invest in a company where the revenues have been going down and all that. So I think one example I can share is maybe GameStop, right? GameStop. Uh, let's see, GME. We can take a look at that. GameStop. So if you see it's trading at 30.9 per share, very cheap, right? But if you look at its income statement, current revenue 5.27 billion, 5.93, 6 billion, 5.09, 6.4. It's been pretty constant. But net income, uh, wow, this year it has been positive. This 2023, let's go to quarterly, right? Yeah, so if you see net income, sometimes it's been negative, right? So quarter one of 2024, the net income was minus 32 million. Um, so you don't want to put money in a company where it's so much of up and down, right? So 1 billion was the revenue, 860 million. So it's the revenue is definitely lower than Q4 of 2024, right? Sorry, Q4 of 2023. Compared to that, the revenue is yeah, almost half, right? So 1.79 versus 860 million. So these are some of the things you can watch. Um, Performance, right? Then there are certain other things, right? Analyst rating. This is something I always watch. So based on the what the analysts think. So these guys are paid to analyze companies. These work for some top companies like JP Morgan and Goldman Sachs and all these companies. So they analyze these stocks and then they, based on their analysis, there is a consensus that hey, this is a strong sell. This is not something that you should buy. In fact, if you own any, you should sell. This is what it says, right? It also gives you 1 year price target. So in 1 year, the analysts think that this stock could be $10, right? So if you put money right now, $30, it will be worth only $10 in 1 year. That's what in general it says. Doesn't mean that it will happen like that. Nobody can predict the market, but it's just based on their technical analysis.
So
Uh,
they're saying about technicals is saying strong buy, analyst is saying strong sell.
Correct.
Why different?
So technicals is purely based on technicals. So if I go to this, let's say 4 hour chart, right? So technicals means like there are certain things called support and resistance levels. So support means, if you see this stock, and this goes back to November of 2024. So if you see this stock, right, stocks always go up and down, right? But if you see it multiple times, it goes to this level, and then it goes down. So because there is a resistance at this level, right? Or multiple times it went here and it went up, so there is a support at this level, right? So based on these technicals, they think that it's a strong buy. There are certain other indicators, like you see this moving MACD, which means moving average convergence divergence. Based on that, uh, based on these technicals, it shows that okay, this line is crossing this line, so yeah, it's a strong buy because now the volumes are coming in. These are some volumes that big market makers, right? Those who buy billions of dollars of shares, based on that, what the market is saying. So this is all data, right? This all of this market data, uh, based on that, the technicals are saying it's a strong buy. Uh, so that's why you should not rely on just one of these indicators, right? If technicals are saying strong buy, but real people are saying no, it's a strong sell, I would stay away from it, right? It's they are both saying opposite things. Um, Financials are giving another story, so you should always look at all these things collectively and make a decision, right? You should also look at macro level, right? I want to look at maybe 12 months how the stock has been performing, right? So yeah, like yeah, I mean it's always been down. It's always in that area. So um, if we look at Nvidia,
Uh, Nachiket, you want to look at Micron because it declared results last week.
yes. Okay, so Micron is $89.72 per share. If you look at the income statement, it's net income. Let's look at just the net income. Minus 1.23 billion, 793, 332, 887, 1.8. So it's got a pretty good um, net income this year, right? This quarter, 1.87 billion. So it jumped from 887 million to 1.87. Revenue went up. So yeah, I mean it definitely shows good signs, right? But if you notice, like Micron, the earnings were last week, I believe. The stock just
Yeah,
crashed, right? Uh,
yeah, right.
they,
So, what is your assessment like? Because it was very interesting that the results were pretty good, but the stock dropped almost 15%. Right?
correct.
Yeah,
That happens. So um, market doesn't always look at these things. So just imagine. So these market makers, those who spend millions or billions of dollars on a stock, right? It's all supply demand. So if somebody is buying billions of dollars of Micron shares, then the demand will go up, right? And the stock price goes up. If somebody is selling billions of dollars of Micron shares, the stock price goes down. So it also depends on the people who are trading, which, so in that case, the fundamentals do not matter because there are just these big players who are playing some game, right? Uh, these days, everything is these big players are using algorithms, right? So there are bots which are actually doing these buying and selling activities. So these bots, if somebody codes a bot, right, they would code it opposite to what other people are doing so that they make money, right? So everyone's looking at financials and everyone's saying, oh, Micron's going up, right? So now it will report good earnings and the stock price will go up. But the bots know exactly that now people will buy before earnings and we will act exactly opposite to that, so that we make money and people lose money. So this is how the game happens in stock market. That's why we can never rely on just one thing here. There are market news. Uh, Last week on Wednesday, I think I posted my message in the group when the Fed Chair Powell started speaking. Stock market just started crashing because because of the rate cuts that he mentioned that there will be only two rate cuts instead of four. Also, this is December is a sell-off month. People are trying to sell their investments so that they can, for tax purposes, and they are trying to kind of balance their losses with their gains, and they're trying to sell off positions. So you never know in December what happens and what week it can happen. What week is a sell-off week? So all of these factors really matter. Um, so that's why relying on just these things is not enough, but you also need to be watchful of the market news. And you don't really need to spend 8 hours a day on CNBC, but if you have a quick review in the morning of what the markets are looking like, what are the key events during the week, then that can give you a certain idea. But always hedge your risk, right? If you had bought Micron at, let's say, $100 before the earnings and now it went down to $90, then yes, you are in loss. But then what if you had hedged your bet by buying some options, which I'll explain later. But if you had bought some options, so that even if it goes down, you will still make some money and offset your losses, right? So those are certain things that you need to do along with buying stocks.
Yeah, definitely interesting. Yeah, thanks, Nikhil.
Okay. Okay. So other factors for stock selection. So I mentioned like market news is one, right? Then elections, right? After elections, Tesla just shot up because Elon Musk kind of married Trump. So stocks just went up, right? Crazy. So all of these things do matter in the stock market. So you have to be prepared for these events to happen. And nobody would know what would happen after these events happen, right? So, but you just have to be prepared by either hedging your losses or hedging your trades by trading options. Uh, what is exchange traded fund, right? So I saw some discussions on ETFs. So ETFs are basically they track performance of a specific index. So there are, let's say, just an example, S&P 500. I talked about S&P 500, which is like a collection of 500 top companies in the US, right? So if you don't want to trade a specific stock, let's say you don't want to take the risk in Tesla, you don't want to take the risk in Apple or Microsoft or all these individual shares, but you want to trade collectively all these 500 shares using something called an ETF. So there is it's just works similar to buying and selling a stock. So instead of selecting the stock, and I'll show you maybe let's say here, right? So SPY is one of the ETFs which tracks the S&P 500, right? So its current price is $594, right? Uh, and it kind of shows the market movement. So if I go to a 5-year chart, you can probably recognize some of the events that happened, right? So if you see at this point, Feb 14th, 2020, S&P 500, the SPY was $337 per share or per ETF, right? But what happened right after that? It went down to $228, down by $100, right? Why? Can somebody guess what happened during this time?
COVID.
COVID, exactly. So COVID, because of that, it crashed. So this shows the events that happened, like some of the major events that happened, and it kind of is an evidence of how the market reacts to these things, right? And then after March 2020, it started going up, going up, going up, and then it just shot up, right? Yeah. And then now it's what, 5 or 6? It was 607 last week. Now it's 594. So this is tracking the 500 shares in the stock market, in the US stock market. So you can buy, just like stocks, you can buy one ETF. It will cost you that much. If you want to buy 100, it will cost you that much. So and if you see over the period of 5 years, it went up by 85%, right? So
So
it's a
this
pretty.
is not particular stock that we are buying here.
Yes, this is not a specific stock you're buying. You are buying the index collection of 500 stocks, right? So the if you scroll down, it will show you some details about that, right? I mean, the sector that this covers are tech, financial services, healthcare, industrial. So there are like what percentage of companies are represented from each of these sectors. This is what it shows. Okay, so technology might be like Apple, Microsoft. So here is showing the top 10 holdings of this asset. So like 37% of the total assets. Apple, Microsoft, Nvidia, Amazon, right? At what percentage? So it shows all that. Um, so yeah, and you can get more details on the actual S&P SPY page, right? You can Google it, and it will show you exactly what these 500 companies are. Same thing about the QQQ. QQQ is another index that tracks the Nasdaq. Uh, so This is purely like mostly all tech companies, right? Um, very few financial services, but mostly tech companies, communication services, right? Apple, Microsoft. So Apple, Microsoft, they are in both S&P 500 as well as Nasdaq 100, right? So there are certain companies which are in both the indices. So this is a lesser risk than buying individual stocks, but lower returns than buying individual stocks. So, um, I mean, this is good, like it's good for a long-term investment. So you keep investing, certain amount every month, every year, and just don't worry about what price you're buying and selling. You don't sell it, you just keep buying it, and then during your retirement, it will help you, right? Because stock market generally goes up. It shows how your country is doing, right? US economy, I mean, things are things will always go up, right? I mean, the economy will always improve. That's the that's the assumption. But so stocks always go up, so this index will always go up. That's the basic assumption, right? So if you see the max, it goes back to, I think in this chart it goes back to 2000. So right, it started at what, $35 or something, and or $100 or whatever, right? Today it's 594. Okay, any questions on that? Okay. What are options? So I always talk about options because I love options, right? There are the basic reasons for options is dollars, right? Um, so in options, you are not actually buying the shares. It's a financial contract providing you the option, but not an obligation to buy shares, right? So let's say you just have $1,000 and you want to trade Tesla. I mean, you cannot trade Tesla with $1,000, right? I mean, one stock just costs 430 something dollar, $440, right? So you're not going to trade Tesla with just $100, but you can certainly buy options, or so you can certainly buy options, and if Tesla goes up, then you can make money, or if it goes down, you can make money. So I'll show you how, just quickly, right? An example, right? Let's say Tesla. So as I said, $433. Let's say you just have $100. So if you go here, trade TSLA options, right? So you can, one thing I showed earlier is just simply buying one share of Tesla, it will cost you $433 or something. But if you go to trade Tesla options, it shows you this chart, and you say buy call, and this is all theory. You can always take a look at Robinhood, and in their help section they provide all this theory, or you can even Google it. I certainly go through the theory in my classes, where I'll provide like the more details on what these are. But let's just say and take an example: buy call, right, or buy put. Buy call is when, if you go here in the builder, Robinhood gives a good summary here, right? So this shows, uh, I think the price will go up. I think the price will go down. So Robinhood shows what strategies you can use in a bullish market when you think the price will go up, what strategies you can use in a bear market, you think the price will go down, what you will use in the, it will go either up or down, or if it stays neutral, right? So Robinhood shows you all that. So if I go back to trade options, trade Tesla options, and I say buy call and expiration date of this Friday. This is always every Friday, right? So if you see December 27th, then Jan 3rd, Jan 10th, so it's, options always expire on Friday, well, except for the ETFs. So buy call, and if I say current price is 432, but if I just say, hey, I just have $100, so I'll use 87, right, 0.87, which is 0.87 times 100, because options are always in the multiples of 100. So if I say continue, what this shows is for buying one call of Tesla for $472.5, I have to pay $87. Okay, that's it. My maximum loss is going to be $87. My max profit is going to be unlimited. Okay, and this is the break even price. So what break even means that if Tesla goes up this week, right? So this chart shows you that if Tesla, right now Tesla is here, if it goes to the right and climbs up, climbs up, climbs up, and goes to 473.37, that's the point from where if it starts going up, this is my expected profit. You know, you see, watch this, right? Okay. So if Tesla goes up from this break-even point, then my expected profit will climb up, and it can go to unlimited profit, right? You can make millions if, of course, if Tesla goes to like what a crazy amount, right? But if Tesla doesn't just stays below 473.37 by Friday, then you're going to lose all your $87, right? That's the risk of options. Some people choose to do trade more, 10 options, right? Then their max cost is 870. And of course, any gains you make are also 10 times, right? So you see the expected gains, it's also 10 times. Uh, what this means is if I do one, what this means is I am trading options for 100 shares of Tesla. If they go above 473.37, then I will make money, right? So I am basically trading 100 shares of Tesla without actually buying them, because buying 100 shares will cost me $43,000 today, right? But I don't have $43,000. I just have $100. So I will use options to do this trade. But options come with a lot of risk here, right? Because you are just speculating that Tesla will go up. What if it doesn't go up? What if it just stays here? Then you are losing all your money, right? The good part is that you already know at the beginning what your loss can be. So let's say you just earned a bonus, or you just won a lottery and $100, $200, and you thought, hey, I'm just going to put $200 in options, and if I lose it, I lose it. That's fine. That's with that attitude you can trade options, right? But
The,
profits are great with options.
but who decides the strike price there, or do we
So
need to put that?
that's based on a formula. It's uh, I forgot the name of the guy. Options formula. Scholes something option Black-Scholes. So it's based on the Black-Scholes formula, right? It's a formula that has been in existence since what 1900s. Um, that's the formula they use to calculate these premiums. So it's all based on supply, demand, time, theta. We don't need to worry about that. But oops. Okay. So, but yeah, that decides these premiums, and these premiums keep changing. So let's say I have more money. Let's say I want to buy uh, a call option here for $35, which is very close to the current price. Then it will cost me more money because there are more chances of Tesla crossing this than Tesla going above 472, right? But then the market will ask me for more money, $860, right? Now, if Tesla starts going up tomorrow, right? If I do this trade and I buy a call option for $860, if Tesla starts going up, then these premiums go up too. So my $860 can become $870 or $960 or $1,060, right? The premiums go up as prices go up when it's a call option. Okay.
But then here, if your breakpoint is reached,
Uh-huh.
that time you already know that okay, you got 860 at least, right? Back or
Yes.
not?
It's usually more. It again depends on the Black-Scholes formula. It's also time is a factor. So the closer you are to the expiration date, so let's say expiration is December 27th, right? If on December 27th the Tesla price is still 440, it's not 443.6, but it's just 442 or 443, then also you can lose all your money. Um, if it's like right at 3:50 p.m. on Friday, December 27th, it's at that price. But if on Tuesday Tesla goes up to 442, 443, then this premium might be whatever. It's 860 can be 960, 1060, whatever. So you can actually sell your call tomorrow also. So let's say I had bought this
Oh,
today
okay.
at 860 and tomorrow the premium went up. It will show you in your account that okay, now your whatever your call option was for your total return now at this point is 200, 250, 300, 450, right? So you can actually sell your call option any day before Friday for a profit.
Yeah,
Or
but like,
yeah,
okay, good. Sorry, sir. Go ahead.
no, and the other way also, right? We already put in 860, but Tesla, you see, due to some market news, you think that Tesla will go down. Now you
Mm,
can get out of that trade by taking some loss, not all, right? So if you, let's say that from this break-even point, you might take like $100, $200, $50, $400 loss, right? But you get out of that trade. So instead of losing all your 860, you might just choose to lose $300 because
mm,
it did not go according to your plan.
right. So with options, you don't need to observe whole day as compared to stocks.
In none of the cases you have to observe the whole day, right?
Seems like
I mean, unless
it's
you
pretty
are trading by the minute, right, or trading by the hour. Uh, you don't really need to buy and sell. Like I mean, if you are trading according to your technicals and you're buying right at the support level, then you know that the stock will go like it always goes like this up and down, right? But in that case, you would know that okay, yeah. I mean, I have bought it at the support level, and it will go to the resistance level at least sometime in the near future. So you hold it and you sell it when it goes to that level. Um, there are also indicators that you can set in TradingView or Thinkorswim that from Charles Schwab where it will indicate you that hey, your stock has reached the resistance level, right? Even if you are not watching it, it will indicate you and then you can just go into your account and sell or buy, all of that. But
So
yeah, I
the
mean,
only thing
time
in
commitment is really up.
option,
Yeah, yeah. Go ahead, sir.
so, yeah, so the in option you can buy and sell within 9:30 to 4 window, right? 4 p.m. window. You cannot buy or sell options after hours.
Correct. That's true.
Mm.
Yeah, options you cannot trade after hours. That's right. And then the opposite logic, right? If you think something is going to go down, um, hold on. Okay, yeah, all right. If you think that something is going down, then you can do a buy put instead of buy call, right? In that case, it's the opposite logic, right? You think that Tesla will go to some level below, right? It will might go to $400 by this December 27th, then you can do that. It's the opposite trade. So now you're hoping that Tesla goes down, right? Uh, the more it goes down, the more money you make, right? Below that break-even point. Um, you can also choose to trade 1 month, 1 year, right? I mean, you can go up to like here in this case, up to Jan 2027, right? If you think that by Jan 2027, I'm sure that Tesla will go to certain level, right? 432, yeah, I think it will go up to $900, right? Then you pay what? It's asking you to pay 6,800, right? 6,000. Of course, it will cost you more because there are more chances of Tesla going from 430 to 900 in 3 years from now, right? So the market takes more money from you, but it will give you much more in return, right? I mean, look at how much money you can make if it does go above that level, right? which is definitely high risk. I never do these kind of trades, right? Because you can never predict that much in advance how much, like what will happen to a stock. All right. Any other questions?
So Nachiket, one question. If we are doing day trading, how we can check different resistance and support levels?
Yes. So if you're doing day trading, you can set up a script. So this is a tool called Think or Swim. It's from Charles Schwab. So if you have a Charles Schwab brokerage account, you can download this tool, and you can practice your trading using that. Just quickly log in. Uh, so using this tool, you can set up a script, uh, and you can say that, okay, when it reaches a resistance level or support level, give me an indication. It's basically a script, a code, piece of code that you have to write. And these days with Chat GPT and all that, you can easily get the code that you can put in Thinkorswim. If I go to on demand, and I don't think I have the scripts in this interface right now. But if you go to like studies here and add a study, there are several studies you can add. Right? You can bearish, bullish candlestick patterns. You can so this is more advanced into like where it will indicate, provide you whatever indications you want. Right? Um, so yeah, that's a short answer. Sorry. Okay. Any other questions before I move to my next slide? Okay, so how can you practice trading without investing anything, right? That's the best part. You don't need to put any money, and you can still practice trading and see how things turn out to you, right? Turn out for you. So Thinkorswim, the tool that I just showed you, this tool, you can go for something called on demand. So if you see here, it's called on demand. You can see my account value is $100,000. This is all fake money. It's not real money. You can make it $1 million. You can make it $500,000, right? Any amount. It's all fake money. Uh, you can go to any date in the past. So right now, what today is 23rd December, 2024. Oh, why is it showing me future? Oh, that's not right. Okay, anyway, so December 2024. So today's 23rd, so there is a 1 or 2 days delay, so it will not show me today's data, because of course there is so much of data that goes behind this, that the best data engineers can't really get that in a day, right? So it takes about 1 or 2 days for data to be available. uh, but you can always go back in time and you can say, okay, hey, December 9th, I just want to go back to December 9th at certain time, right? 9:43 a.m. And I just go. So this will simulate the market as it was on December 9th at 9:43 a.m. And the market will move exactly like that, as if you are back in time, right? So if I go here, uh, let's just pick any shares, any stock, Tesla, right? That's our favorite. So this is actually trading right now as if it's a live market on December 9th. So you notice that Tesla price was $396. Today, what was it? $430, right? So you can actually go ahead and do a trade, and you can buy. I think this is a different interface, but let's try it here. Okay, Tesla. You can buy quantity 100, right? This is a different interface. It's a little more advanced. It's more advanced than Robinhood, so it will take a little time to get used to it. We can buy 100 shares, right, or 200 or whatever, right? You can just pick a number, and at that limit order or market. I just want to do a market order now. Because this is fake money, right? I don't really care what price it gets bought at. And I don't know why it's. Okay, I'll just do limit, I think. All right, anyway, 7. So, okay, it just bought Tesla shares. I'll go back to charts. So, if you see my account, it has Tesla shares at 100 shares at 396. Now you can simulate, you can go forward in time. Let's say December, I don't know, December 17th, 1 week later at 9:44, right? Now, if you see, just wait for a few seconds for the data to load. It's still saying buffering. Okay, look at my gain, right? My gain is $7,782, right? So 19% gain. So in 1 week, I would have made $7,700 and if I can just do sell 100 shares, market order, confirm, send, right? Now, if you see my account balance, account value here, I started with 100,000. Now it's $107,824, right? So in 1 week I made. This you can practice your trading, but now if you have the right education, then you know where when you can buy or you could have bought this shares. You can go back in time, test your technical knowledge, and you can try these different strategies out. And you can see, okay, yeah, if I had applied this strategy on so and so day because of so and so event, this I would have either made money or lost money, right? You can do the same thing for options also using this tool. You can, instead of trading stocks, you can always trade options also. Um, so option chain. Okay. So let's say December 17th, right? I think that was a Tuesday. So December 20th, that's the Friday expiry. You can do, there is a single, you can see this says calls, this says puts. So you have to learn this tool, right? In order to, but of course it's all free. Uh, you can just practice as much as you want. Do call options, put options. These are the strike prices in the middle column here. This is the expiration date. Uh, if you change these filters, you can see an expiration date for the following week also, like December 27th. So you can do all that. You can practice your trading using that. Uh, and as I said, like options is not just buy call or buy put. Those are the most riskiest options. But there are other things like vertical spreads or butterflies or diagonals, straddles, triangles. There are so many different options that you can use in different types of markets. So all of that needs education. You cannot just make a decision that hey, I think Tesla is going to go up, so I'll just buy a call. No, you're risking all your money. Without the right knowledge and risk management, you should not be trading that, right? Sometimes you may get lucky, right? If on December 9th, if you had bought a call option for Tesla, uh, then you would have spent less money, right? But you would have made maybe equal amount of money in profits 1 week later because Tesla went up, right? Okay, any other questions?
So Nachiket,
Yes, go ahead.
so as a starter, what is the risk? How much, it's and how much time should we be spending? The main thing is like with the existing office stuff and everything, how much time should we be actually investing as well? I know it's time is money, and that's
Mhm.
what stocks will return us as well. But just wanted to understand.
Yeah, so it all comes with practice, right? As a beginner, you might find that even 2 hours you might spend even an hour or 2 hours doing a couple of trades. Uh, but once you start doing it, it might be instant, right? So you might see the technicals, you have your indicators set up, your scripts are indicating that, okay, this is the time to buy. Then you saw how easy it was to just to actually do that trade, right? I showed you buying Tesla shares, right? If I know that 433 is a good price to buy Tesla because based on all the fundamentals, based on the technical indicators, I think Tesla is going to go to $500 in another 2 months or 3 months. Then, right? When you have all that analysis done, and that analysis it depends from person to person. So once you have more practice, right, using TradingView tool, using Thinkorswim, using all these tools, technical indicators, then uh, buying is very easy, right? You buy, you save, buy, and you buy, right? It takes less than a second. Analysis is something that takes time. So some companies, the analysis is pretty simple. Like you can listen to the market news, you can verify what they are talking about, and TradingView will give you all that information. You don't really need to see the income statement or balance sheet. You don't really need to know have that knowledge. Having that knowledge is really good if you can read the balance sheets and income statements. But if you don't have that knowledge, TradingView will give all that in a summarized format, right? So that way you can do your analysis and you can trade. Um, I put in less than an hour every day in stock trading. So usually my lunch time is when I trade. I don't do day trading. So if you are doing day trading, which is like more like a minute by minute trading, or so you're watching the candlestick patterns and you're buying, selling, buying, selling. If you're doing that, of course you will need the entire day, right? 9:30 to 4. But I don't do that because that is highly risky. What I do is when I buy stocks, I buy them a little longer than few weeks or months, right? But if you're doing options, you do it on a weekly basis. I do it on a weekly basis. So I open my positions on Monday and to expire on the Friday. So basically, I'm doing more work on Monday and the Friday, and sometime in the middle, when in during the week, if things are going south or north, or based on how the market's reacting, I might react during the week. So there is really no fixed time amount of time that you can spend. You can spend as less, like, if you are doing just one trade, you might spend 15-20 minutes. If you are doing 10 trades, you might spend more time. So uh, but yeah, I mean that it just depends on how much money you want to make, right? How many trades you want to take, how much money you want to make. So based on that, you will have to invest your time. Yeah, but certainly with a day job, I've been doing it for 16 years. I have been doing
Oh,
trading for last 16 years using my day job. But options, I have been doing options for the last 5 years. So options, I used to do just stock trading, just buying for longer term and selling at a certain point. But options, I really started trading the last 4 to 5 years. Yeah, but yeah, it's certainly achievable with day job. You can. I even traded. I told somebody I even traded in a shuttle on my phone, right? While going from one place to another place, and just while standing using my one hand, I have traded using my phone. It's that simple. So yeah, but of course, to take you for you to get to that point, education is definitely important, but practice is most important. So if you don't have the practice, then just having education is not going to help you. You have to practice. So that's why these tools are really helpful, like Thinkorswim. You can practice. Yeah, you have, let's say you have an entire weekend with you. You can just use this tool and practice what anything that comes to your mind, right? Any company that comes to your mind, any type of option strategy that comes to your mind, you can practice using this tool. Um, Once you are confident uh, about what you're doing, then you can enter the real market with real money, right? So if I just flip this switch from on demand, if I just turn it off, this is the real market, right? Now it's my real money that I'll be trading with. So it's all it's that easy, right? Uh, so
Hey, Nachiket, I have one question.
mhm.
So, do you recommend like focusing on one of these three choices, or having a diversified investment in all these three choices, like options, then stocks and ETF? Or
Yeah,
because right now, to be very honest, we kind of depend more on high yield saving account, which gives like 4% max.
yeah, yeah.
So, like I have, let's say 50K and I want to start.
Yeah, that's
So,
savings is a ripoff. So yeah, it won't make you
yeah.
rich. It'll just give you certain very small amount. But yes, definitely you don't want to rely on one strategy, right? So let's say you have $50,000. You may put certain portion of that, maybe 30% or so, or 40% in long term. So you buy some really good stocks, right, with strong fundamentals, which don't go much up in the price, but you just want something that you own some real assets, right? Some good reputable companies. You might put another 30%, 40% in short-term trade,
Mm.
or ETFs, or maybe ETFs is more long-term, but you might put another 40% or so in stocks, right? Some high growth stocks or some mid cap stocks. I won't recommend small cap, but mid cap and large cap stocks. And then rest of the money, I would say maybe 10% of your money you would use for options, because
Mhm.
options is more liquid, right? It's more on a weekly basis. Yeah, so options, uh, usually when things don't go according to the plan, then you might lose an entire week of income in options. That's why for options, use a very small amount, because the returns are large. Like I mean, I would say about 20-25% on the
Mhm.
safer side, you can expect to get return. So if you are putting $10,000 in options, different strategies, you can probably expect about 20-25% returns in a week. It's about $2,000-$2,500 in a week. But that again, that
Okay.
depends on your risk level also. You can also, if you want to take much lower risk, you can expect about $1,000, right? 10%, 5%, that way.
Right. Okay. Thanks.
But when you, I said about 40% in stocks, right? When you put your money in stocks, um, you can, anything that you own, you can always do a certain type of options which is called covered calls. So you can continue making money on the stocks that you already own every week, right? So quickly show. I think we are out of time, but if people want to hang out for a few minutes, I'll show you one example. So let's say Tesla, right? Tesla $432 we talked about. Let's say you want to put your $50,000 in Tesla, right? It's what,
Mhm.
43,000, right? So you bought 100 shares. You always have to buy in multiples of 100 for trading covered calls on Tesla. Okay. Now assume that you own 100 shares of Tesla. Um, and actually, let me give you an example of something that I already own, right? GE Vernova. I own GE Vernova, right? I have 100 shares of GE Vernova at 339.98, $340. So if I do trade GEV options and I do sell call instead of buy call that I showed earlier, I just do sell call, and I want to choose, let's say next Friday, right? Jan 3rd, 11 days from now. Uh, and I want to sell a call. Now, if you noticed, my cost price was 340. So anything above 340 is a gain for me, right? If I sell a call for, let's say 345, let's pick the one right above this. If I click that, continue, number of contracts. So number of contracts means 100 shares of each. If I had 200 shares, I would put 2. If I had 300 shares, I would put 3, but I have 100 shares, so I can only put 1, right? And I say whatever limit price, right? And then I review. What will happen is when I submit this, it says you have to enter a limit price, right? So if I just say 7.7, right? So what will happen is, it's saying not enough share because I have already traded, like opened a covered call for this, so it will not allow me to do it again. Uh, so right now I will put $770 in my pocket, right? Right now that's what will happen. I will put $770 in my pocket. Nobody can take it out of my pocket. Okay. No matter what happens to GE Vernova share, even if it goes down to $0, which would not happen, but even if it goes down to zero, no one can touch this $770. Now on Jan 3rd, multiple things can happen. If the stock price goes above $345, let's say it goes to $350, then all my 100 shares of GE Vernova will get sold at my strike price of 345, right? But what was my buying price? It was 340, right? So $5 gain times 100. So I will make $500 plus I had made $770 in premium. So I will make $1,270 uh, collectively on GE Vernova if it gets sold at 345. Okay. Uh, Now, if GE stays below 345, it's just, let's say, it just says that this same price 344.92. It goes up, it goes down, goes up, goes down. But on Friday, Jan 3rd, it stays at this price 344 or something. Then uh, nothing happens. I will still continue to own my 300 shares of GE Vernova, and I have already earned the $770. Okay, uh, and then what can I do? I can again sell a covered call for the following week. I can keep doing that. I can keep doing that every week. So basically, I mean, we'll just take a wild example like $770 times how many weeks in a year? 52. I can make $40,000 by just owning 100 shares of G, and this is all realized gain. $40,000 short term realized gain, right? This is in theory. It doesn't happen because what happens generally is either your stocks will get sold or the price can fall down to 335, then your next week's premium will be lower than 700, right? You might take a risk that okay, I'll sell it at 337, it can get assigned at 337, you'll lose that $2.50, but then that will be offset by whatever money you have made from premium. So all of these things can happen, right? But even if on an average let's say $200 you are making every week, I'm just taking a wild guess, right? Still it's like $10,000 on in realized gains, from putting what $34,000 in it. Now that's one of the ways, strategies that you can apply for the stocks that you already own, right? uh, Tesla, right? Tesla pays you a lot of premium because Tesla is highly volatile stock. uh, the more volatile a stock is, the higher the premiums you will get. So, right, if I do Jan 3rd for Tesla, 43,000 I'll spend in buying 100 shares, but for $435, I'll make $1,700, right, in 1 week. Uh, that's a lot of money, right? If I can choose to go up, let's say I love the Tesla shares so much that I don't want them to get sold. I'm ready to accept a lower premium. I can go to 445, right? And I think that Tesla will not go up to that. And I'll continue and I'll say, okay, I'll only make $1,300 instead of whatever, $1,700. Uh, so I'll make $400 less, but in return, I'll save my Tesla stocks so that I can continue doing this, applying this strategy every week, right? The risk is that Tesla can go to $100, $200. I mean, stocks, you never know, right? But if you study your fundamentals and your technicals, then you can have a better educated knowledge, or you can have a better knowledge before entering a trade for buying shares and doing covered calls, right? So at what point you should do covered calls, right? 432, it's right now here. Then tools like TradingView will help you there, right? So if you see Tesla, and if you have all your indicators in place, and if you go to like a let's say 5-minute chart, um, or let's say, right? I mean, if you do that, you would have all your indicators here, so you would know, okay, Tesla right now is at this level. It can go down, it can go up. How much it can go? Your indicators can give you a better idea. So you see, like this here, for example, this was $482. So Tesla touched $482 on 17 December. It went down, it went back to that level, it again went down. So that was our resistance level, right? This was a support level, right? So so there is certain level of like stuff, but Tesla, Tesla is a bad stock to really uh, do this analysis, just because Elon Musk and Trump's relationship. But there are other stocks you can certainly like look at, Apple or more stable stocks, uh, which where you can set up your indicators and get all your support and resistance levels. So that way, when you know that, okay, hey, this stock right now the price is near the support level, so this is the best time to buy. But the earnings give a different story. The earnings are saying that this company has not been doing good. Then in that case, you would stay away from it, right? So there are all these things. You would eventually create a checklist to decide whether to buy something at a certain point or whether to sell something at a certain point, right?
Yeah, yeah.
But this is one of the ways that I always use. That's one of the ways I generate most of my income by selling covered calls. Um, and then of course, to offset any other losses, I use debit spreads, credit spreads, butterflies, all these other strategies that I use for more of a weekly income generation. uh, you can always like sell much into the future, so you don't have to do this weekly, right? So let's say, I think, Rohit, you asked me about time commitment, right? I don't know if Rohit still there. Yeah.
Yes.
So you asked me about time curve. So in this case, you can choose to just do this 30 days in for next 30 days, right? Jan 24th. If you choose that expiration and you want to take a risk of, let's say, $440, right? And you can just do that, earn $2,900, and just don't do anything for the next 1 month, right? You until Jan 24th. Uh, you're just doing nothing. You just made $2,900. You are happy with it. If Tesla goes above 440, it will get sold. If it stays below 440, it will not get sold. Your money will, like your Tesla stock will be freed up on that date. You'll do this trade again for another month. You can do it in 1 year in advance. I mean, it will
The
really
risk
take,
is over
yeah.
there, just 29.50.
Yeah, it's the premium that you will earn if you owned Tesla stocks. So this is a one of the strategies
Mm-hmm.
called covered call.
Okay, cover calls you're
But
talking
for
about.
this, you have to own the shares first. So
Correct,
you have
correct.
to put in $43,000 to own 100, at least 100 shares of Tesla, right? If you have 200 shares of Tesla, then you can do two contracts. So in that case, you would have made $5,900, right? But for that, you have to invest 200 times $432,
Oh, yeah.
right?
So it's
Uh,
like almost 64,000.
yeah, it's the same thing with any other stock, right? AMD, right? AMD is cheaper than Tesla, right? Uh, but since AMD is not as volatile as Tesla, the market doesn't reward you that much, right? If you look at AMD, even if you do four times that amount, 125 times 125 times four, right? Then it's kind of like close to Tesla. But even in that case, it's only what 1.8 times four, right? So it's nothing comparable to Tesla. I think
Mm-hmm.
Tesla was about $1,700. This is about $715.
Mm.
Apple doesn't pay much, right? Apple, because it's a very stable company, so Apple knows that hey, we are not that volatile, so we'll not reward any investors, or and it's not Apple who decides it, but it's basically the market. So market doesn't reward you that much for owning Apple, but so you won't make much money in the covered calls.
The covered call is like options, but if you need to have stocks first.
You need to have the stocks first, right? Right. Okay.
Yeah, that was good.
So I know it was a long call, but if anyone has any other questions, you can certainly reach out to me. Just call me, or just we can talk. Um, and I know this is too much to digest in 1.5 hours, but it gives you a basic idea of why trade stocks, because income is unlimited. To be honest, you can earn any amount, but you need money power. You need money power. You do need education. Without that, and practice, yeah, without practice you can't do any of this, right? You need a lot of practice, and you need to know what you are doing before doing all these. You need to, if you are buying a call, you need to know that, hey, I'm risking $200 here. I can lose all the $200 here, right? If you are doing a debit spread, right? Let's say buy call, sell call. This is called a debit spread. So Robinhood will automatically tell you what strategy you are using based on what actions you take here, right? It'll tell you, okay, my max profit is capped at 131, max loss is capped at 119. I can lose all the $119 in 1 week, but if the stock price stays above to 57.5, then I'll make $131, right? So my total cost is 127, so, or 119, sorry. So I'm risking 119. In return I can get 131, so that's what, more than 100%, right? So but you need to know that, right? You need to, this way you need to gauge your risk, and based on your investment profile you can take those risks.
Nachiket, I will have to drop Nachiket.
Sure. Okay, so
All the
thanks everyone.
Thank you.
Yeah,
Thanks.
definitely reach out to me if you have questions. Call me, or and I can definitely answer. Okay.
Thank you very much, Nachiket. Very informative session.
Okay. All
Thanks
right.
a lot.
Thank you, Nachiket.
Yep. Bye. Happy holidays.
Thanks, Nachiket.
Bye.
Happy holidays.
Yeah, thank you,
Bye.
Nachiket.
Bye bye.
Bye.
Thank you, Nachiket.